All right, welcome back to Robinhood Stock Market Watch List Group. My name is Carlos, and today is Sunday, the 16th of April, 2023, and we're going to look ahead of all the events that are scheduled to happen for this week. And one of the reasons why we do that is because it is imperative, it is extremely important that we always know what's going to happen before it happens. And it's always best to look at and to focus on the things that are going to provide the most volatility. The top news. Things that are going to affect the entire stock market system. And if you haven't noticed, by now, they're economic reports. Economic reports have the biggest impact on the entire stock market system, not just one particular stock or a particular segment of the stock. It's the whole entire system. And so one of our favorite websites that we like to pull this information from is a website called investing.com. So let's go over there right now. Now I have the economic calendar pulled up, but we need to configure it a little bit, because when we're looking at it, we're going to see a lot of other countries and a lot of other information, but we want to narrow that down by clicking the little filters icon. And we can do this on the website, or we can also utilize this on the investing.com app that you can download for free at your app store. So we'll clear everything. Just click on clear. There's only two things that we need to check, and that is a check mark under the United States, and then another one under importance. You'll notice that there's a 1 star, 2 stars, and a 3 stars. Now we want to put a check mark under 3 stars because we're telling the system to pull everything that is the most important out of the United States economics. And so when we do that, we want to click on this week. Looking ahead, we can see that there's nothing scheduled for Monday. Monday is just kind of a day where it's going to just absorb, weekend news or activity. And so, to be determined, but we'll look ahead on some other things that will give us more insight of what Monday could potentially be. So, but looking at Tuesday, April 18th, we have the building permits for the month of March. Now, the more rare that these reports are, the more volatile that they'll be, meaning, for example, there are weekly reports, there are monthly reports, there are quarterly reports, and there's yearly reports. So the more rare, like the yearly or the quarterly report, the more potent that this report's going to be to the stock market, especially if it's a monthly report. But if it's a weekly report, those are every week. Those provide kind of a mild effect on the market, but they still do provide an effect. But this report on Tuesday is a monthly report for the month of March. And so this is going to provide a very strong amount of volatility, especially when it comes to like the housing market. Now, it's also important to know the time of when these events are going to be released, because we need to know, is it going to affect before the stock market opens, or is it going to affect after the stock market opens? But this type of information affects the morning time. There is something that the government releases that affects during power hour or sometime right before close, and that's going to be this other website called FactBase, where it provides us the president's schedule as well as the White House schedule. Again, these are usually something that they schedule right before the stock market closes, which will also provide a massive effect on the entire stock market system. So, and it's interesting how they time these precisely, to provide volatility to the stock market, just right before the market or right after the market opens. But in this case, Tuesday morning, before the market opens, 1 hour before the market opens, because when we're looking at the website, this is going to provide us the Eastern time. But if you're looking at on your mobile application, it's going to default to your existing time zone. So it's imperative that you know when it's going to be released, so you know what's going to happen. And we can tell by what's going to happen by looking at the forecast versus the previous. That is very, very important and a key bit of information that's going to tell us, is it going to provide us bullish characteristics or bearish characteristics by comparing these two numbers. So for example, the previous report was 1.55 million building permits, but the forecast is saying it's going to be less than the previous at 1.45 million. That means be prepared for bearish characteristics. Now, sometimes we do get, an effect where bad news is good news, but we haven't seen that lately ever since that we saw where BRICS wants to try to detach themselves from the US dollar. Ever since they started talking about, many countries getting away from the US dollar, our market kind of freaked out, because even though our government's trying to, lower inflation, but the other reason, or another way that they can do that is by lowering the US dollar, but they're doing it very, very mildly, very, very slowly. But with this whole BRICS thing, where other countries are getting away from it, that would drastically lower the US dollar value. And so it would be too much too quickly. And so that's when, in the last few weeks, where bad news was bad news, because it was just too much too quickly. But the market may be transitioning back to bad news is good news, but we haven't quite yet fully seen that. Last week we saw some mixed signals with some of the economic reports, but we need to focus on the majority of the time. And if you're not sure what these reports are, feel free to click on them. They'll provide a brief bit of information about the report and how it can affect the stock market. So for example, building permits measures the change in the number of the new building permits issued by the government. Building permits are a key indicator of the demand in the housing market. A higher than expected reading should be taken as a positive or bullish for the US dollar or the stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar, which can affect the stock market drastically. And so as the government is doing a lot of interest rate hikes, that is slowing down people, from buying homes as well as vehicles. But then again, we have a lot of manipulation in the lending world as well as the housing market, just like they did in 2008, where they made it very, very easy for people to buy a home. And so that way it helps manipulate the housing market. So that way they're like, oh, the housing market's the best it's ever been, blah blah blah. Even though we're not really hearing that now, but we're seeing a strong market and an economy. And so, but by focusing on these reports, so Tuesday morning before the stock market opens, we're anticipating bearish characteristics. So plus Tuesday and Thursday are still quantitative tightening days. And if you don't know what quantitative tightening is, it's also known as QT. So if you're listening to like Bloomberg or Yahoo Finance, they say QT, that means quantitative tightening. That's when the government is selling stocks that they bought previously. In fact, that was when they closed the economy down for the second quarter of 2020 during the pandemic, they forced the stock market pretty much to crash, for a very short period of time. But then they did what was called QE, or quantitative easing, where they were buying stocks dirt cheap. Well, now they're selling it to secure their gains, and but they're doing it little by little. But there's a schedule for that too. Right here, under the Federal Reserve Bank of New York, that the government uses, and here are the schedules. So here's the April 18th on Tuesday, and then April 20th, 420 on Thursday. However, we see that the government on Tuesday plans to sell $3.3 billion worth of stocks, versus on Thursday, they're going to sell $15.9 billion worth of stocks. That's quite a bit, but eventually this will slow down as we get more into the summer season, or the third quarter. Eventually this will be once a week or once every couple weeks. But it's for now, it's going to be aggressive just for a couple more months. But during the third quarter, just know that is the full-on bull season, bull market, that we're already at. Where the second quarter, which is what we're in, is a transitional season from going from a bear season to a bull market or bull season. And so right now, as I've always mentioned, we're kind of getting out of that and transitioning. Even though a lot of people, what about the recession? Well, there's something that I've always shared regarding that, and let me see if I can post it really quick, just to kind of remind you where we're at with our stock market and economic cycle. It's very, very important, because there's a cycle for everything. And so that just means that it repeats itself regularly. And so it's just a matter of knowing, what the cycle is, and everything. So here I have pulled up our, and this is just a very basic, user-friendly way to view our economic and stock market cycles. So over here in the bottom left, this is the market bottom. That's where we had left just a couple months ago. So when the market has reached its bottom, it's saying to buy technology stocks, buy finance stocks, and cyclical stocks. So you notice how the market is starting to come up, but the full recession is still going down. That means that the full recession may not have peaked yet, but you'll notice that the stock market is coming up. And all of a sudden, during this the summertime, now we're in full-on bull market mode. Well, still saying, still buy technology stocks, even though you're late. But it may be wise to start buying industrial stocks and basic material stocks. But even though that the full recession is near, but investors in Wall Street know that the early recovery is really right around the corner, and that's why they want to start pumping up the market now, to not lose out on this opportunity. Because, like I said, this cycle happens all the time. This is a yearly cycle, and it's a 10-year cycle. So the 10-year cycle is pretty much the economy, but the stock market does have the yearly cycle, where every 6 months it kind of comes up or so, or 9 months, and then 3 to 6 months, then it comes down. And so basically, for example, during the fourth quarter, it's time to sell the finance stocks, technology stocks, and cyclical stocks, and to buy our basic materials, and particularly energy, because energy, like oil, gas, things like that, the type of stocks, those are usually pretty low. at that time. So you're getting out of something that's really high, getting into something that's low, and then throughout the fourth quarter and the first quarter, we'll start getting all these like earning reports and stuff like that on the energy stocks, and that now the values will be very high, and that'll be the time to get out of the energy stocks in the basic materials, especially like gold, silver, things like that, and eventually the market on those or these stocks will kind of be at their bottom, get into those, and then sell the finance stocks, and then just kind of wait out on that, and then to get back into the finance stocks and technology stocks during the first quarter when they've reached their bottom. And you just kind of do the same thing like every 6 months or 9 months or so. And that's a very good strategy for long-term investors. That way you're not losing out on the gains that you've accumulated all year. And so that way you're shifting things around to always provide consistent gains all the time. And so it's just very, very important to know the economic cycle. And I do post this from time to time, and I can share this with you guys, but it will be and it's always on our group and chat rooms. So it's always something that we talk about, because it's extremely important to know, again, what's going to happen before it happens. So Wednesday, going back to the economic reports, we have Wednesday, April 19th. We have the crude oil inventory levels, which is scheduled to be released 1 hour after the stock market opens. Now, typically, the first hour and the last hour of the stock market day are the most volatile times of the day, and sometimes we lose that momentum after that first hour. But like I said, sometimes these reports are scheduled precisely the way that they need to be scheduled to kind of help build volatility. And that's why it's extremely important to know these schedules, because if you're not, you're relying on news, and when you are relying on a news article or news alert, the event has already happened. You weren't really prepared or to know the forecast of whether it was going to provide bearish characteristics or bullish characteristics. One of the things that a lot of traders will say is to always plan your trades and to trade your plan. And Benjamin Franklin once said, if you fail to plan, you're planning to fail. And that's not us. That's not what we do, because we are professional traders that always plan ahead. That way we know what to expect, and we prepare a trading plan for the week. And that's why one of the reasons we do these meetings, so that way we can kind of get together and talk about this stuff. So the forecast for the crude oil inventories, and this is a weekly report, so it will provide kind of a mild effect on the entire stock market system. But the forecast does look like it's going to be down less than the previous. We're in the negatives, negative 500,000 barrels, versus the previous report was up about 500,000 barrels. And so, but most reports, we need those numbers to be up for it to be bullish. There are two reports where we need them to be down for them to be bearish, and that's bullish, and that's crude oil inventories and the unemployment report, which is the initial jobless claims. The reason why these numbers need to be down in order for them to be bullish is because if people are buying oil, gas, and that means they're traveling, they're spending money, and that helps the economy. If they're not driving and spending money, that doesn't help the economy. Same thing with the unemployment report. If people are working, they're generating money, that helps the economy, because they're spending money on things, as well as paying taxes. And so, but lately, the unemployment report has been very, very strong and very, very low. There's been almost seems like more jobs than there are workers. However, last week, it did kind of surprisingly jump to 239,000. And so the forecast is anticipating the number to kind of keep climbing up. Maybe we're at a certain point now with this, our recession or our economy, where unemployment now is starting. We're starting to see more unemployment now. as a lot of companies have done a lot of layoffs and stuff. But we're also seeing a lot of stores closing down, even like Walmart closing down stores in many states throughout the country. Walmart provides a lot of jobs for people, and especially these types of people would definitely file for unemployment. Unlike a lot of tech jobs would probably immediately apply for another job somewhere else. And so but one of the reasons why Walmart's saying they're closing a lot of stores down, because they're just not generating enough profits. A lot of people, especially local people, believe that those particular stores just have a very high crime rate, and a lot of people are walking in these stores and walking out without paying for things. And so Walmart, instead of having to go too in depth into loss prevention, that could create a lot of publicity. They'd rather just close the store down, just keep their stores open in areas that have a low crime rate. And so, but they haven't really mentioned that. But we know, you can't, bullshit a bullshitter. And so we see what happens. We hear what people are saying, and so that's what we can kind of go by. But just know that this forecast is saying, be prepared for more bearish characteristics. And so, but we do see that Wednesday does look bullish. So, but then again, Tuesday and Thursday, especially with the quantitative tightening where the government is selling stocks, these could be very bearish days, meaning where, like, you're pouring fuel on the fire. You got a little fire already, you're pouring fuel on it by executing, selling billions of dollars worth of stocks. You're going to get a big bonfire at that point. So hopefully Monday will be bullish, because the market needs to come up a little bit before it can come down. And so so we're kind of seeing, maybe Monday is going to be bullish, then we got bearish, bullish, bearish, and even with the and again, the unemployment report, which is scheduled to be released 1 hour before the stock market opens, as well as the Philadelphia Fed Manufacturing Index for the month of April, is also going to be low, but not as low as the previous report. But then at 30 minutes after the stock market opens, we have the existing home sales report for the entire month of March. This is huge, you guys. This is one of the backbones of the United States economy. Existing home sales is used homes, versus new homes. It's like what, a 500,000 every month versus almost 5 million home sales every month. This is saying this is going to be less than the previous. So expect bearish characteristics, a bearish report out of this. So Thursday looks like it's probably going to be the day with the most volatility. Now, this is a great ingredient for those that love to straddle. Anyone that's into stock options, I always recommend to straddle, because straddling allows us to work with something, meaning where, if you're familiar with stock options, obviously there's a call and a put. A call is where we bet a stock goes up. A put is when we bet against the stock, betting it goes down. Now, straddle is when we're doing both at the same time. I know it may sound conflicting. Why would anyone bet a stock goes up and down at the same time? Well, it's because you can only lose what you have on one side, but your gains on the other side are potentially unlimited. And so in a very volatile situation, you'll see that, where you may lose a lot on one side, but your gains on the other side could be 200%. It could have been 500%, or even over 1,000%. And so this is just something that that we can take advantage of. And I'll see if I can find something to use as an example to kind of show you Let me see if I can find. I know Boeing was very volatile, I think, last Friday. Let's see if I can find some options information from it. Let's see here. So Boeing was down last Friday about 5%. So when the options menu here is right on the bottom, we can see that the calls are on the left side and the puts are on the right side from how I have my screen set up here. So Boeing was down about $12. So the previous day, that means that it would have been at like 214. And so let's see, we'll just kind of go around that because I don't have that many, pulled up. But, just by looking at, the 212, 210, we can see that, and this date it expires for the 21st. So if we were using, last week's expiration, it would be more volatile. But this is a great example, a live example to use, because we can see that, again, Boeing was down 5.5%. If we were to bet that the stock went up, we would have lost around 80-90%. But look at the puts, you would have gained around 300%. That gain washes out your loss on the other side and puts you ahead. When it comes to straddling, it does not matter if the stock or the stock market surges straight up or plunges straight down. It is a win-win scenario, as long as we apply certain strategies and rules and guidelines to this strategy. And just like any other strategy, there's always certain rules and guidelines to kind of go by to provide, basically for risk management, to mitigate that, but also to we can also maximize our gains on one side while minimizing our losses on the other side by also buying and selling separately. And so let me see if I can find my set of rules and guidelines really quick that I'll share with you that have tremendously helped out a lot. Because once you kind of go out of your rules or guidelines, that's when bad things can happen. And so these are my set of rules and guidelines that have really helped me. And the number one rule is to always straddle heavy on the top 3 stock options. And so if you don't know any of these rules, if you don't understand any of these rules, it's important that you always ask questions, and that way So for example, rule number 1, always straddle heavily on the top 3 stock options. One of the most common questions I get asked is, what are the top 3 stock options? Well, there's a website that we utilize. It's called barchart.com. They have a phenomenal area for options. And if we go to the options, we have the most active options. We can now see what the top stock options are for the current trading day. Now, this website does update every 15 minutes after the stock market opens, so we can really, even though it's just a screener scanner, this is our radar. This is kind of what we can see, what's going on. And we can see within the top 3 we have for Friday, we have Tesla, Nikola, Apple, and then kind of goes down from there to Nvidia, Amazon, and so on. But when we're looking at this regularly, we know what is normally on the top or what's on the list, and what's not normally on the top or on the list. And Nikola is never on the top 3. It is down a lot. It's down to 82 cents now. That was down 15%. And we can see that out of this options volume, again, volume is always the current day's buying and selling activity. But we can see with this type of volume, we can see a ratio between calls and puts. Are there betting that are they betting more against the stock, or they're betting the stock's going to go up? In this case with Nikola, they're betting against it. We got almost 67.5%. They're betting Nikola is going to keep going down versus 32%. They're starting to bet that Nikola could, potentially go up. And sometimes we can see a very unusual amount of activity. For example, Thursday, Nikola was down on the bottom of the list, but it was 90% puts. And then boom, Friday, it was down 15% because everyone was betting against it because they knew something was up. And sometimes we can see unusual, or maybe sometimes inside, trading activity. And when we're seeing 90% on something, that is very, very unusual. Normally what we see is around 50-50, maybe 60-40. Sometimes, we're starting to get out of that unusual or that normal area when we start seeing this, almost 30-70, like Google right here. Google's up, a little over 1% last Friday, but we have 71% buying calls. They're like, nope, Google's going to keep going up, today as well as the next trading day. And that's what kind of helps provide us some information of what the next trading day is going to be like. So let's kind of look into that a little bit here. So we have Tesla and Apple, which are normally the top two, and then Amazon is normally, but it does kind of circulate between, being the top three, between that and NVIDIA or AMD or some kind of semiconductor. But normally the top three is going to be Tesla, Apple, and Amazon, or you, like I said, you can circulate between Amazon, NVIDIA, or AMD, or something like that, or even Meta. It just depends. But the top two are pretty much always the Tesla and Apple. And you can tell by looking at this regularly and looking at the options volume of how favored that these are, as well as straddling, especially if you see 50-50 and that high, almost 2 million options volume. People are straddling this regularly on a daily basis, and that's part of the strategies. Rule number one: always straddle heavy on the top three stock options. Anything other than that is kind of considered like a lottery play, do at your own risk. But rule number two is strike price always at the share price, always at the money. And so that's what that means. And because going back to the Webull platform here, looking at this. So for example, we're gonna start buying in our calls and puts. The money is the share price. So right now, let's say Boeing is right around 102. 202. Let's say it's 202. And so, or maybe it's right in the middle in this case. Straddling is usually always the same strike price, but if the share price is right in between two strike prices, then we want to do what's called a strangle. Strangle is still like a straddle, but it's two different strike prices. So one strike price, like the call, can maybe be a little higher, where the put can be a little lower. And so, but we want to keep it the same concept. For example, like right here, because the share price may be closer to one side over the other, and that's where we can see the price may be the same. For example, this call here is basically $288 versus the put is right around $235. And so they're very close, but it's only because the share price is a little more closer to this particular strike price. And so, but that's fine. We'll still see a good amount of volatility. And so, even though you see that the gain on this is 500% in just one day, we still want to grab it. And so we want to grab both. We never want to go into the next day, with a call without a put. And we never want to have a put without a call. We always want to basically cover our bases just in case if somebody manipulates the market, or if something else catastrophic happens. North Korea fires missiles or whatever, and it scares investors, or, Wall Street or whatever. Or Biden. What if Biden has a heart attack and and all of a sudden it freaks out the market. These unexpected things can happen, and when it comes to straddling, it does not matter if the stock market surges or plunges. It is a win-win. It gives us something to work with. Bring it on is what we tell ourselves when we're straddling. And so going back to the economic reports, we've been able to predict based on this information of what each day is going to be like. Monday, to me, looks bullish, especially by looking at the options activity. Even though we see some of the big dogs around 50-50, some of them we're seeing more than that, like Amazon's at 60% calls. Meta, we have 62% calls. We have JP Morgan, 59% calls. Bank of America, almost 70% calls. Microsoft, almost 59% calls. Google, 71% calls. So these investors from last Friday are pretty bullish for Monday. Otherwise they would not be holding this amount of call ratio, going into the weekend and Monday. And so that's where we can get that bit of information of what the next day is going to be like without having anything scheduled for that day. So Monday looks bullish, and then Tuesday looks bearish. Wednesday looks bullish. Thursday looks bearish, and then Friday, kind of to be determined, is another kind of wild card. Just depends on what the White House and the president may have scheduled for us. Now, this last week, there wasn't any press conferences at the White House. Biden didn't really do anything, say anything. He's been in Europe this whole entire time, which can also provide us some and journalists and stuff a little bit of a worry that when he does come back this week, what are the journalists going to say? And sometimes we can think like a journalist, because in a way we are. We're looking ahead into things before they happen, and we're anticipating some kind of results. And so when Biden gets back, if you're a journalist, what are you going to ask? You're going to kind of drill them for questions on what's going on over there. What did you guys decide to do regarding the Ukraine and dealing with China or Russia and this and that? What about the tanks? Are we giving airplanes to Ukraine? These are all going to be questions that are going to scare investors in Wall Street. And so it's imperative that we always look at the president's and the White House schedule, because it will provide a massive amount of volatility during a power hour, 1 hour before the stock market closes, sometimes 2 hours before the stock market closes. And so, but to kind of go a little bit more in the past, things to kind of look for is things like this little green blue bar. It says press briefing, and then it talks a little bit about press briefing with, and sometimes they'll have a little description of what they may talk about. But if they don't have a description of what they're going to talk about, it's just general stuff, whatever's on the news or the media. Then the White House will try to distract us a little bit with whatever they kind of have going on. But these journalists are no dummies. They're going to go straight to the the meat and potatoes, and start changing the White House's subject, and talk about more important things. And so but then we may have other things that we need to look for when Joe Biden is going to talk. I'm trying to find something that may mention something like that. But these reports are scheduled and released every midnight Eastern time or 9 p.m. Pacific time. And so anyone on the West Coast, it kind of gives them a little bit more of an advantage, because they still may be awake, where they can kind of look at it before they go to bed and go to sleep. And that way they can kind of know more details of what the next day is going to be like. So here's one right here, and again, this time is based on Eastern time, so you can see how this is scheduled to be released during power hour. And so this is, and it's weird, again, these things are always scheduled to provide volatility with the stock market. If not, why would they schedule it during the market hours? Why not wait until after the stock market closes? That way it doesn't affect the market. No, they want volatility, and so they just nonchalantly, schedule these. So, but what we're looking for when we're diving into these is like this right here: the president delivers remarks to reaffirm the commitment to support the people of Mississippi, blah blah blah. But maybe you could talk about microchips or EVs, electric vehicles, or mining the lithium ion, companies, around the country. Or talking about the automotive industry or some kind of industry. If they mention a company name, that stock is going to surge. It's given a free pass if the whole day is bearish. And he mentions Ford Motor Company starting to build these mega factories. They're going to hire 4,000 new jobs, or they're going to offer 4,000 new jobs, blah blah. Well, they just mentioned a name to national television and to millions of people. Now people, we got to buy Ford Motor Company, blah, and then all of a sudden Ford starts surging. So that's why it's important that we also try to listen to this stuff live when it happens. And the best way to kind of tune into this stuff live is you go to YouTube and type in either White House live as your keywords or Joe Biden live. 15 minutes before this scheduled time. Now, sometimes they're late. And let's say this is scheduled to happen at 2:25 p.m. Eastern time, but he might not get on there until 3 p.m. Eastern time. So I mean, it is what it is, but but it's still going to provide a massive amount of volatility, and we can be prepared for that by knowing what's going to happen before it happens. And so, like I said, this is very, very valuable, highly valuable, intelligent information that if you're not utilizing this information, I recommend that you do, because it's only going to make you better and more profitable. And so, so we talked about a lot of, the economic reports, the Joe Biden or the president and the White House schedule, as well as looking into some options activity. But we have a very, very busy week with earnings. The earnings season is kicking in this week with some great blue chip or high market capital stocks. And so so let's kind of look ahead really quick with the top 10 scheduled earning release for this week. Like I said, we have a very, very busy week. So Monday, so tomorrow morning, we're going to have Charles Schwab and M&T Bank, State Street. We got some, financial stocks and volatility coming up ahead starting tomorrow. And Tuesday, we have Bank of America before the market opens, as well as Johnson & Johnson's, Goldman Sachs, and Lockheed Martin. With Lockheed Martin, it's going to be very interesting because, lately, I think we've been keeping them very, very busy. But Tuesday after close, then we have Netflix. All eyes are going to be on Netflix because Netflix has been very, very volatile. And then we also have United Airlines. So we're going to see some airlines volatility, that's for sure. And then Wednesday, we do have, before the market opens, we have Morgan Stanley, Bank of America, and NASDAQ, Abbott, Ally Financial. It's going to be a very, very busy week. And then after close Wednesday, we have Tesla. So the news and all eyes are going to be definitely focused on Tesla, as Tesla, as you can see, is basically one of their number one, most popular, most traded stock. And as well as IBM. So we're going to start seeing some semiconductor volatility coming up soon, as well as Thursday morning before the stock market opens. We have the Taiwan Semiconductor Company that will also be releasing their earnings. And then AT&T, Rite Aid, Alaska Airlines, and then the Union Pacific. And then after close, we have the PPG, Seagate, and then Friday before the market opens, we have P&G and several other companies. Now we do have our top 10 earnings analysis that are in, starting with Tesla. Again, Tesla is expected to beat their estimates, and they're scheduled to release their earnings on Wednesday after the stock market closes. However, investors are bullish going into the company's earning release with a 68% expecting an earnings beat. Now, typically when we're looking at this stuff, you guys, 65% is normally average. So this percentage is slightly above average, which is great for Elon and with Tesla. Option traders are pricing in a good amount of volatility and are estimated right around 8%. And normally it averages right around 6-7% a price movement in either direction, but we're expecting a little bit more just because of some of the recent changes and anticipation that a lot of people are have been receiving. And so next one is going to be our Charles Schwab, where it is expected to kind of be in line with their estimates. Investors, however, are bearish going into the company's earning with a 55% expecting an earnings beat. Option traders are pricing in a lot of volatility with this one, more than we've ever seen, at around 9%. Normally the stock moves right around 3, maybe 4% if we're lucky, but we're expecting a lot more volatility from this stock. Next one is Bank of America. Bank of America is also expected to beat their estimates. It's confirmed to release their earnings on Tuesday before the stock market opens. Investors are bearish going into the company's earning release, but with a 64% expecting an earnings beat. I know it sounds interesting, why investors are bearish, but they're thinking that with the whole interest rate hike and everything, that they just haven't really been seeing a lot of business, but that's not always the case. For example, people are still buying homes, because the lending world and the the housing industry is always finding a way, even if it's making it easier, or lowering the standards for people to get a home, making it easier for them to buy a home, as well as the automotive industry. Anytime there's a big change in the economy, whether the economy is doing very good, people like to upgrade their vehicles. If the economy is doing bad, people downgrade their vehicles. So the automotive industry is always, there and is ready for anything. And so, but they still use banks and lenders to finance their, their stuff. And so, option traders are pricing in right around a 5% price movement with Bank of America, where normally it moves right around 2 or 3%. Netflix is, again, this is going to be a major one, as Netflix has always been kind of a very, very volatile one. So it's definitely, a no-brainer. Every once in a while, we may get kind of like or something kind of, like a little hiccup or something, but it's very, very rare where Netflix doesn't really move. Unless maybe it moves beforehand where it kind of prices itself in, but Netflix is expected to beat their estimates and is scheduled to be reported at Tuesday after the stock market opens or closes. After the stock market closes, investors are bearish going into the company's earnings release with a 58% expecting an earnings beat. So it's a little below average. Netflix is, having some issues. It's very expensive. I mean, we're paying what, almost $20 a month for Netflix to have, the 4K and everything. very expensive compared to other ones, are still nearly $5 or less than $10. So you can kind of get a little bit more, streaming platforms for the same price that we're getting Netflix. Now, option traders are pricing in right around 8 or a 9% price movement in either direction, where lately in the past it's been more volatile than that. It's moved right around 15%, and it still can, but and option traders are thinking that that it's not going to move that much. Maybe Netflix has found its bottom, which we talked about our stock market cycle and how it had already reached its bottom several months ago. Technology stocks are looking forward and looking to be moving upwards. And so, but it's doing it little by little, because when things were plummeting, it was plummeting significantly. And so, but now things are crawling back up there, and that's where investors, option traders are pricing in about half the amount of volatility, but that's still a very massive amount of volatility. 8-9%, that's huge. And so, but it also shows that on Thursday, April 13th, there was some notable buying of right around 2,200 contracts of the $395 call that's expiring May 19th, where some of the other ones like Tesla, we saw where on Wednesday, April 12th, there was a notable buying of 46,000 contracts of the $450 put. That is so bizarre, expiring on Friday, January 19th. So that is very, very unusual. But it usually, when you see things significantly in the money, those are like hedge fund companies or people with a lot of money, millions of dollars. That way it helps keep their cost very high. That way they can, that way they don't have to buy as many contracts. Next one is going to be our Johnson & Johnson. Johnson & Johnson is expected to beat their estimates and is confirmed to release their earnings on Tuesday before the stock market opens. Investors are bearish going into the company's earnings release, with a 57, almost a 58% expecting an earnings beat. Option traders are pricing in right around 2% price movement in either direction, which is not very volatile. Normally it moves right around 1.5, not very volatile. But Goldman Sachs, though, that one, we should see a little bit more volatility from this one than normal, and they're expected to miss their estimates, and is confirmed to release their earnings on Tuesday morning before the stock market opens. Investors are bearish going into the company's earnings release, but with a nearly 40% expecting an earnings beat. So far, this has been one of the lowest percentages that we've seen so far. Option traders are pricing in right around a 4% price movement, and it's looking like it's probably going to be more in the downwards direction. Normally, the stock moves right around 3.5% in either direction. Then we have the M&T Bank, which is scheduled to be released tomorrow morning, Monday morning, before the stock market opens, but they are expected to beat their estimates. While investors are bearish going into the company's earnings release, but with a nearly 55% expecting an earnings beats. Option traders are pricing in around an 8% price movement in either direction. Normally it moves right around 6%. Then we have State Street, where they're expected to release their earnings on Monday morning as well. But we're expected to, it's expected to beat their estimates, while investors are bearish going into the company's earnings release, but with a right around a 48% expecting an earnings beat. Option traders are pricing in right around a 5 to almost a 6% price movement in either direction. Now, Lockheed Martin, that's what's really neat about some of these pictures, is that if you're not familiar with the names of these companies, sometimes a picture can say 1,000 words. So Lockheed Martin is obviously a defense stock. They build a lot of, they make a lot of things for the United States government, as well as for other governments around countries around the world. Lockheed Martin is expected to beat their estimates, but is also confirmed to release their earnings on Tuesday morning before the stock market opens. Investors are bullish going into the company's earnings release with almost a 56% expecting an earnings beat. Wish it was a little bit more, but option traders are pricing in almost a 3% price movement in either direction, where it normally moves right around, almost 5%, 4 to 5%. So Jeremy, in the chat room, you're asking, would you straddle these earnings on these days? Now, earnings is kind of like a lottery play, as we look into some of the part of our rules or guidelines for the straddling. One of them we'll see where we want to try to avoid earnings splits unless it's a lottery play. We want to invest lightly. If we're sure that a earnings is going to go a particular direction, we want to go lightly because sometimes a high reward, a high risk can be a high reward. And so, but when it comes to straddling, we got to be very careful with that, because if the stock doesn't move, then we're going to be affected by what's called implied volatility crush, also known as IV crush. The stock doesn't move at all, both the calls and the puts will be devalued. They're both going to depreciate, and it could be 20%, it could be 30%, it could be 40% on both sides. So it's almost kind of like a penalty that because the stock didn't move. And so, but that, or maybe not enough. Maybe it only moved 1%, and we're expecting 8% or something like that. And so that is where we want to be very, very careful with the earnings, because we want to be more certain that it's going to do what we want it to do. Whether it provides a massive amount of volatility, we can straddle, but straddle lightly, or it's more certain that it's going to go a particular direction, then we can just buy our calls or puts, depending on which direction that we anticipate that it's going to go in. So, but earnings is a type of strategy, but it's we want to be very careful that it's not our normal daily invest heavy on the top three stock options, because some of the other rules with this, because we talked about the strike price. Now, the expiration date, rule number 3, always the soonest expiration date for the most volatility, because if you pick an expiration date that's later in the future, like a couple of weeks or a month from now, not only is it going to be more expensive, but you're not going to see that kind of volatility. We want volatility. That way we can, lose a certain amount, and then gain a significant amount. We want those big gainers of like what we saw before, 300%, 500%. If we have an expiration date that's beyond, several weeks, we're not going to see that type of volatility. And the only way we can is by picking the soonest expiration date, because it'll provide us the most volatility. And that's what we want when it comes to straddling. Now, rule number 5 with these rules and guidelines is rule number 4 is to always buy our straddles 15 minutes before close to sell the next morning within the first hour. Because when we're buying our straddles, our calls and puts in the last 15 minutes, we're avoiding, most of the volatility throughout the day. We're avoiding most of the time decay and the depreciation that it provides in the middle of the day. Now, for a more seasoned veteran trader and investor, we can buy a little sooner than 15 minutes, because we can buy our calls and puts separately. That way, maybe we can go into the next day with some gains on one side. And so, but for the majority, especially if you're not utilizing moving averages yet, we want to buy both our calls and puts within 15 minutes before close, and then we hold on to those and then sell them the next day within the first hour. because we talked and looked at a lot of the economic reports, and a lot of times with these economic reports that come out, all of a sudden, boom, we have even more volatility. And sometimes we want to wait for that because, again, your gains can potentially outwash your losses on the other side and put you ahead. And so once you're there, then you can sell it, secure your gains, and repeat this strategy on a daily basis with the top three stock options. So, but yeah, rule number 4, avoid earnings and splits, doing it heavily unless it's a lottery play, invest lightly. Now, rule number 6, again, is to avoid straddling throughout the middle of the day to minimize that time depreciation that we talked about. So, but again, these are just some really simple, basic rules that is the foundation of this strategy. And you can always add more rules to it once you kind of, get the hang of it. Let me see. Got booted out. Jeremy, looks like you, some reason, you said you got booted out, got back in. I don't know. Probably a glitch, may happen due to maybe your internet connection or something or other. You also said, can you show your strategy for exiting the trade once you are in it? Well, that kind of has to do with either you can do that in 2 different ways. So again, we can do that by if, for example, if you're not utilizing moving averages, maybe you're just using the Robinhood account, or maybe you just don't want to use moving averages. Again, you can just wait to sell after the first hour, or wait until after all the economic reports have been released, and see what the market does. And after that, you're either going to be a wash, or you're going to be at a gain. And so that you sell, and either one, even if the market hasn't even moved and you're at a wash, get rid of it. Do not be hopeful. Hope is just part of your emotion. Oh, I hope, that's not us. That's not a professional trader characteristics. They don't hope. These are particular strategies that we use based on a process. We think process oriented, and we get out to avoid the time depreciation throughout the middle of the day. Because if it hasn't done anything after the first hour, most likely it's not going to do anything until maybe after the last hour. So it's kind of like avoiding a fight, so that way you can live to fight another day. So we're getting out. We'll get back in later on. We're going to avoid all the time decay, because if you're holding throughout the middle of the day, your time depreciation could be 10%, could be 20%, or more. And so we do not want that. That can easily be avoided just by simply getting out. And so but it's definitely something we want to, because if you're doing this regularly, you can potentially gain 100% every week. So you can double your investment every week by utilizing this strategy. Now, as a more of a veteran trader or an investor, we can utilize the moving averages, and I'll show you that. Let me see if I can find something I can post really quick. Moving averages can help provide us buying and selling signals, and without these, we're kind of trading blindly. And so I'm uploading this now, so that way you can kind of see. So with the moving averages, so we have these little candlestick things here. This is our price line. The white line is the moving average line. It's a line that kind of lags behind the price movements, but when they cross over, it provides us our buying and selling signals. So for example, let's say exiting, Jeremy, that you mentioned, let's say that the market goes down after it opens. So this is where we can, once it's down, this is where we want to sell our puts right here, and we hold on to our calls. So now with this method, we can maximize our gains and minimize our losses. So when the price line begins to cut up, we sell our puts and we hold on to our calls until further notice. So going to my my calls image here, once it goes down, then it's time to sell the calls. And then once we're out, we secured our gains, minimized our losses, and now we're waiting for the next or during power hour. And we may see something like this where maybe 1 hour before the stock market closes, all of a sudden the price line cuts up. Now we can buy the calls. So we buy the calls, and the price line goes up. Now we're having some gains right before close, and then 15 minutes before close, all of a sudden the stock market starts to kind of come down. Well, we want to buy our puts there now that we're high, and then the market starts to come down and we have some gains in our puts, and then all of a sudden the stock market has closed. Now we have some gains in our calls and some gains in the puts going into the next trading day. Now we have something to work with, and we repeat this process regularly on a daily basis. And so again, we can see that using the moving averages with with certain stocks here, just depends on. Let me switch to a 5-minute here. This is Apple. This was Apple on Friday. So just kind of what I'm saying here, especially before the stock market closes, we have this, I have 3 moving average lines, and we have the price line. I don't use candles because candles, I don't need it. And the price line is a very clear picture. I can easily see it versus candles. You just got a lot of these, bars, vertical bars that kind of distort the overall picture. I need a clear vision of what's going on so I can make an intelligent buying and selling decision. And so we can see, utilizing the 5-minute graph for Apple, right before close, we saw how the price line cuts up through the moving average lines, providing us a uptrend signal or a buying signal. It's time to buy our calls, just like what I showed you using the very user-friendly screenshot. So we buy our calls before close, about maybe an hour, a couple hours before, and then we're watching it, and then we start buying our puts right before close, and then it goes down, but then it goes back up, whatever. So most likely we might not have gained any puts, but at least we've gained on the calls, and that way we have some gains going into the next day. And those are just little tricks. You don't have to do that, but like I said, you can buy both the calls and puts within the last 15 minutes before close. So there's 2 methods of doing it. You can do it one way over the other. Just depends on your level of the stock market, of how experienced you are. But for those that are not as experienced, we want to start with the basics, and that's utilizing the foundations of those rules and guidelines, getting in 15 minutes before close. And then same thing, after the market opens, so market opens and then boom, Apple had surged up, at that point, you could have gained, a lot more on over the other, and you can just sell both of them, or sell the call as the stock begins to fall. Then you can sell the put before it begins to cross over. So that way, again, you're maximizing your gains on one side and minimizing your losses on the other side. And so that's why moving averages can really help out with this strategy. That way we can buy and sell at different times to maximize our gains on one side while minimizing our losses on the other side. Let's see, Jeremy, you're also asking, what moving average do you use? I use the EMA, the exponential moving averages, because out of all of the moving averages, EMA reacts more with the price changes, versus the other ones are a little bit more mellower. They don't react as quickly to the price changes. But as a day trader, you want that to be more reactive. And so I have it set for that. And normally it's defaulted to the 5, 10, and the 20, which kind of represents. So if we're looking at a 1-minute chart, it would be a 5-minute moving average, 10-minute moving average, and a 20-minute moving average. But if we're looking at a daily chart, let's switch over to the day, a daily graph. We can see that the that the moving averages are based on days. So we have a 5-day moving average line, a 10-day moving average line, and a 20-day moving average line. Or it could also represent as a 1-week moving average, 2-week moving, because there's only 5 days per a 1 week trading period. And so we have a 1 week, 2 week, and a 4 week or 1 month, moving average line. And so that's just my setup. And it has, it works, but also we can do a dual screen where we can see a 1 minute on one side and a 5 minute on the other side, because sometimes one communicates better than the other, especially early in the morning when there's a lot of volatility. We want to listen to both of them, because some may communicate, but a lot of times they may communicate the same information, especially because the other indicator I use on the bottom is the MACD, where it's 2 moving average lines, but you have these other colored bars which represent a gap distance between the 2 moving average lines. Once they cross over, and sometimes they do prematurely, it's kind of warning us, like the 1 minute graph, it's saying, hey, be prepared. The moving average lines above you may cross over, and also provide you a downtrending and a selling signal. And once it got to this part here, it did, and the MACD was way in, was already in there. And so the MACD also kind of prematurely told us what was going to happen before it happened, and there it did, using the 1 minute chart. Now the 5 minute chart, may have been a little bit more behind, so where we could have gone, we would have maybe made more gains on our calls selling it using the 1 minute graph, and then waiting on the 5 minute graph, transitioning that to sell the put. And so so that's where we can kind of utilize, both of these screens for our advantage. And I use Webull. There's a lot of different, platforms you can use, but I use Webull for the advanced charts and graphs. You can use all kinds of other things, but I've just you learned Webull many years ago and just kind of stuck with it, along with Robinhood and some other platforms that are specialized in different things. Let's see, what else are you saying here? What moving averages do you use? So again, yeah, EMA and MACD, those are my preference. So going back to the earnings, the Taiwan Semiconductor Manufacturer Company is expected to beat their estimates and is scheduled to report their earnings on Thursday morning before the stock market opens. Investors are bearish going into the company's earnings release, with a 56% expecting an earnings beats. Option traders are pricing in right around a 5% price movement in either direction, when normally it's moved right around 4%. Now, I know a lot of people are always asking, well, why, how come these, chip manufacturers just have such a low, expecting an earnings beats, or, and a lot of times they've struggled. These microchips require rare earth materials and gold and a lot of other, different types of material to manufacture them. And if they can't get these rare earth materials, they can't manufacture them. So they can't build enough. But we've noticed, since the pandemic and shutting down the economy, a lot of companies don't want to go back to the way it was, because they're more profitable when they have a short supply and high demand. It keeps inflation up. Even though their costs for the materials and stuff have gone down, they've been able to become more profitable by doing this. And it's not good for consumers, unfortunately, and that's why we still see a shortage in all kinds of things right now, is because we have industries that are trying to keep these values up as much as possible for financial gains. And so that's kind of the dilemma with the semiconductors. but it is slowly getting better. Now, Rite Aid, this is kind of our little wild card here. Rite Aid was, before the pandemic, was always on the verge of going bankrupt. I mean, they were next to GameStop. They were next to Sears. I mean, they were a penny stock. I don't know where they're at now. Let's take a look. See, it says RAD. They're $2.45. Well, ever since the pandemic happened, the government closed the economy down, but leaving essential businesses open. All of a sudden, Rite Aid did very, very well because they were a essential business. And so their stock value had went up. However, things are going back to normal, and Rite Aid is beginning to struggle again. However, Rite Aid is expected to miss their earnings. No surprise there. On Thursday morning before the stock market opens, investors are bearish going into the company's earnings release, but with a 78% expecting an earnings beat. That is very, very bizarre. 78% out of everything we've seen so far. This seems to be the highest percentage. But why are they so bearish? When they are expecting a high percentage. Option traders are pricing in around a 13% price movement in either direction, where normally it has moved, a lot more than that, 16% in either direction. So, but a lot of people are going to be watching Rite Aid to see kind of, what happens, and to see, what they might want to do. So, and I posted this the other day, yesterday, because I found it on, and it's very interesting because we talked a lot about today about the moving averages, times of the day, and the volatility of the day, and so it shows here from the beginning. So this is open to close. So the bell traders, right after after the market opens, bell traders take advantage of the quick movements in the first 30 minutes of the day. And we saw a lot of that, with the Apple chart, and how we can take advantage of that, especially when it comes to straddling both calls and puts. It doesn't matter, again, if the stock market or the stock is down or if the stock is up. It gives us something to work with no matter what. And when it comes to straddling, you can sleep better at night, because that way you're not, thinking, oh, did I make a wrong decision? Oh, I hope it does this. I hope it does that. Get that hope out of there and focus on the straddling strategy, because again, it gives us something to work with. If the stock market is up, again, we know what to do. Or if the stock market is down, we know what to do, because if the stock market is down, now we know that we need to sell our puts, secure the gains, hold on to the calls until further notice, till it goes up. That way we can maximize our gains on one side to minimize our losses on the other side. So the breakout traders, which is the second one here, this is watch for momentum breakouts in the first few hours of the trading day. Now, why do you think there is a breakout after the first hour or the second hour of the day? Now, we've already went through this, and it's because it's the economic reports. If we are expecting an economic report after the first hour from the stock market opens, we are prepared for this. If there is no economic report that's scheduled for 1 hour after the stock market opens, we're not going to see this breakout. Nothing's going to happen because nothing is scheduled to happen. And so that is one of the ways that we know what's going to happen before it happens. But once it breaks out, let's say there is an economic report, 1 hour after the stock market opens, and then boom, it does this. Well, after that, it does. The reversal traders are now looking into look to confirm reversals intraday after the morning momentum has worn off. And sometimes we get those people that wait after the first hour or two because now they want to bet against it. So we got bears, we got bulls, type of trading and whatnot, but it's all based off these scheduled economic reports. These are scheduled events. That's why it's so important to know these events, what they're about, and how it can affect the market. Because it's only going to help you guys tremendously. And so then we have the range traders. Identify midday support and resistance. Range traders like getting in, getting out, or scalping. They're just buying in, buying and selling, throughout the little, because there's nothing really going on. All the price is doing is just it's ranging flat with a very, very mild amount of volatility. So, but in the options world, this is where a lot of the time depreciation is. So if you're getting into options, any options at this time, you need to get in, get out, secure your gains, and wait for a better time. And then we have the closing bell. Traders take advantage of the market movements near the end of the day. And that was another thing we talked about when it comes to the moving averages. And like I said, there's several different strategies you can utilize throughout this whole thing, but it's important to know what bits and pieces are what, and how they even happen to begin with. Because like I said, a lot of times the closing bell can be done from the scheduled events with the White House or the president. Because they start talking, we're gonna have a little dip here, and then as long as they haven't spooked investors, boom, the market recovers back to where it originally was. And so that's why it's important to know these scheduled events, because otherwise, if you're a new trader and you're not doing this, you're relying on the news, and because when these things happen, and it takes the news companies time to process an article, to blast it out there as a notification, and you could have gotten this notification from some news app 5 minutes or even 30 minutes or even an hour after this event already took place. So it's imperative to know what's going to happen, what's scheduled to happen before it happens, so that way we know what to expect, and especially the timing of it all. And it's just a huge advantage to take. And then so last but not least, it's always important that we look at the investing.com's top 5 things to watch in the market a week ahead. So that way, as we do our due diligence, that we make sure we did not miss anything. So earnings season gets underway in the earnest, while Federal Reserve policymakers will have a last chance to air their views ahead of next month's policy meeting. The PMI data could point to the impact of a recent turmoil in the financial sector. Meanwhile, the United Kingdom and China are to release key economic data soon. So the number one most important thing that investing.com is saying to really watch for is the earnings, which we've already kind of went over. Earnings is going to be it's pretty much game on for the top dogs. Number 2 is the Fed watch. Most investors are betting that the Fed will still rate hikes another 25 basis points at its next policy meeting on May 3rd, despite the minutes of the central bank's March meeting acknowledging the increased risk of a recession later this year after the recent turmoil in the financial sector. In the next few days, investors will have a final chance to hear from the Fed officials before they enter their traditional blackout period ahead of the meeting, including New York President John Williams, Governor, blah, 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 and whatnot. The United States is also to release data on the existing home sales, which we talked about, a pair of regional manufacturing surveys, and a weekly report of the initial jobless claims, which is the unemployment report, which economists expect to show another increase amid a rise in layoffs since the beginning of the year, which again, that was another thing that we talked about. Now, I'm going to try to upload something that it was a little kind of a thing that I saw. I can't remember, either yesterday or I think it was Friday was when I saw this. Hopefully I still have it here. Let me see here. Probably see. I probably got rid of it. But anyway, so the investors are not investors, but the government doesn't, so interest rate hikes, let's pull something up here really quick. So I do want to point out that here is the schedule for the interest rate hike decision. And then we can see more if we want to look into the past, but looking into the future, like we do, we see that we have 1, 2, 3, 4, 5, 6 more interest rate hike decisions for this year. It doesn't mean that they're going to do the interest rate hikes, because they can easily go neutral and say, no, we plan to leave it. But we know that that's not going to really happen anytime soon, because the economy is still very, very strong. And so the inflation has barely gone down. And we know that the government keeps saying, oh, we got more work to do. We got more work to do. That they're trying to create kind of a mini recession, and it's not working very well. And so they have to have more interest rate hikes to try to prevent people from buying homes and vehicles and whatnot, because they can try to get a large supply and a low demand that will greatly help, the lowering inflation that they originally increased. But just know that we have 6 more interest rate hikes. We have May 3rd, June 14th, July 26th, September 20th, November 1st, and December 13th. Now, after that, next year, we should be seeing what's called interest rate easing, which they're going to start lowering interest rates, because the recession will hit its peak here. And we've kind of talked a little bit about that by looking at the stock market and the economic cycle. So when the interest rates are at their highest, that's when we should be at the full recession. But again, as we get into next year, when we'll start seeing interest rate easing, when they start lowering interest rates, that's when we'll start seeing the early recovery. But the stock market is going to be, with, like, especially with the, a lot of these, particularly the technology stocks, they're going to be very, very high. And then as we get closer into next year, like winter season, these technology stocks, they'll start dipping down. And that's when we want to start getting into the energy stocks and kind of start focusing on that. But so just know, I know this is later on in the future, but just know that's what's going to happen. And so number 3, we have the PMI data. The Eurozone, in the United States and the United Kingdom are to release the PMI, or the Purchasing Managers Index, data on Friday. So the market watchers will be on a lookout for signs of whether the recent turmoil in the banking sector is already affecting economic growth. Last week, the International Monetary Fund cut its global growth forecast and warned that the problems in the financial sector meant the global economy was more likely to underperform rather than outstrip estimates. The PMI data should show whether growth is slowing, and if so, how quickly. This question is quickly becoming a major driver for markets as central banks approach the end of their tightening cycles. Markets are betting on the Fed cutting rates by year end, and expectations predicted on the major United States slowdown in the second half of the year. Number 4 is the United Kingdom data, which the United Kingdom is to release February's employment data on Tuesday. This isn't so much going to affect the United States as much as it will the United Kingdom. But then the Chinese data. China is to release a flurry of economic data on Tuesday, including reports on the first quarter gross domestic product, March retail sales, and industrial production, with markets participants hoping for more clarity on the uneven recovery in the world's second largest economy. Now, this will affect some Chinese stocks in our U.S. stock market, such as like NEO or Alibaba. And so those are good to maybe kind of look into as we watch that on Monday and as we go into Tuesday. So Chinese stocks we should see quite a bit of volume tomorrow with those. While Chinese exports are increasing and credit growth is solid, inflation remains subdued as the consumer and industrial sectors struggle to recover in the wake of the hit from the harsh pandemic era restrictions. Policymakers have pledged to step up support for the economy, which recorded one of its worst performances in nearly half a century last year due to the strict COVID-19 curbs. But again, they're slowly, releasing those and getting back to business, which is only going to help their economic data. So let's go back to some of the options activity and take a look at what is going on last Friday by clicking on the option volume leaders. So looking at the chat room, Jeremy, you said, do you have a Discord where we can see you live while market is open? We do have a Discord. We haven't used it in a long time. We did have a live trading room when Facebook allowed us to use a live audio, video, and screen sharing room, but they discontinued that because they said other groups weren't using it other than us, and so we'll have to figure out what we're going to use for our live trading room. So I'll get back to you on that, but we do have a Discord, but I just haven't used it in probably a year or a couple of years. So I'll figure that out. And but looking at the options activity here, it's important that anytime we're looking at options activity throughout the weekend is that we look to avoid anything that's expired, anything that has a DTE with a 0, which means days until it's expired. So we want to look at the things that are still current. So we do see for Nikola, Friday we saw a lot of unusual for Nikola, and right now we are seeing a lot of calls for Nikola. And then out of everything, this particular call, $2 call strike price for Nikola. Now Nikola right now is at 82 cents per share. We have a $2 call strike price that expires in a couple of years, or 643 days, January 17th of 2025. Something's going on where people are betting that Nikola is going to be higher than what it is now. And even if you're not into stock options, this information can still be very, very valuable to you if you buy in shares. Because if you're buying Nikola at 82 cents a share and it gets to $2, I mean, you just gained, over 100%. You just gained like 150%. So, and whatever Nikola is going on, I mean, this could be like some kind of insider trading information that we may not yet heard of any news or whatever. Because I mean, maybe something's going on that people absolutely believe and are betting heavily on, that Nikola is finally, doing something. Now, Nikola is an electric vehicle manufacturer company, but they've had some issues in the past, many, many years ago, that they got in trouble. They had some lawsuits and stuff because I think they were either, they just weren't ready yet. And I think they were manipulating
investors, or they had fraud or something, and they just, you know, they just weren't there yet, and so they got in trouble. But they're looking past that now. They're, you know, they've you know, and it looks like it's time. And so they are a growing company, and they do have some products. Let me show you here really quick. Let's see if we can find some images of some of their products. So obviously they have, yeah, the trucks. You know, this is a really neat looking truck. I've always kind of favored this design. I was always hoping that this would have came out. This looks better than the Rivian, I think. I mean, this is a neat looking, you know, pickup truck. And most Americans want trucks and SUVs. You know, they don't want cars. And so it only makes sense that you know, if you're an electric vehicle company getting into the automotive world, that you build what people want, and this is what they want. And as well as, you know, semi trucks. This is what's going to really compete with Tesla's semi truck. And so these things are happening. You know, many years ago, we watched the first governor in the United States that implemented a deadline was Hawaii. He said that by 2035, all brand new vehicles sold in the state of Hawaii are required to be all electric. And so then I watched the governor of California go, "Oh, it's a great idea. Let's do that too." And then another state back east did it. Well, and I live in the state of Washington, and our governor here was like, "That's a great idea, but let's be the first one to do it." And so they implemented a deadline by 2030. All new cars and crossover SUVs are now required to be all electric. So this is creating a domino effect that had started, you know, several years ago, and eventually all states throughout the United States are going to be in a transition to going all electric. Well, it's happening sooner than later, and so it's a good time to know that, and what is going to happen soon. And obviously Nikola, it wants to be a part of it, and so do investors, because they're buying in very low. I've not really seen this yet happen. I've been waiting for it to happen years, and it looks like it's just now starting to happen. So we need to do a little bit more due diligence on Nikola, because we obviously see there's a lot of volume activity. I mean, a lot of volume activity with Nikola, and a majority of them are calls betting Nikola is going up. And so we can also tell, because sometimes like volume, you know, again, is buying and selling activity. You know, sometimes it's hard to tell, well, is it buying activity or selling activity, or is it kind of 50-50? Well, the one way we can tell of how unusual that this is that the volume exceeds the open interest. And if you're not familiar with options, open interest is going to be new for you. Open interest is the total number of open option contracts that have been traded but not yet liquidated via offsetting trades, meaning that prior from that day, this is what was purchased but not yet sold yet. These are like people holding. But since we see the volume has well exceeded over the open interest, this is providing pure buying activity. So a lot of people are buying this $1 call strike price versus the other one. I mean, the other one has the $2 strike price has a lot of open interest. I mean, a lot. But the volume, though, is less than the open interest, which most likely, I still believe it's probably pure buying activity. So going into Monday, this particular strike price, these two numbers will probably merge together. So we'll probably see over 300,000 open interest, or if it's selling activity, it'll come off of the open interest. So the open interest will be less. And sometimes we can see that kind of activity where maybe they're selling one but getting into the other. But I don't think so with this one. I think we're going to see an accumulation of these two numbers that are going to merge together. And so, but to be determined, later on tomorrow when the market opens. So the next one down is the is Apple. We have an Apple put. Now Apple, which is currently at $165.21, but we have an expiration date for this Friday, the 21st, for $165 put strike price. But normally when we see something like that, we do see a call right here, because when on the other page, remember we saw some of the top ones like Tesla, Apple, those call and put ratios were right around 50-50. So those are our straddling traders. Those are again, always follow the money. That's another little pro trader saying. And if they're straddling those, we're straddling those as well. And so, but that's the type of activity that we're seeing here, that they're buying at the money. And that, again, that was one of our rules, is to the strike price should always be at the money, always at the share price. And that's what they're doing. They're buying the $165 call and the put strike price, because they got something to work with now. And so we see a good amount of volume. We see a fair amount of open interest with these. That's good. Now we're also seeing AMC, and we do see a Nikola put here, just not very many of them, but it's just a precaution, as a backup. Look at this. Oh my gosh, we have a $3 call strike price for Nikola. Same expiration dates, January 17th of 2025, almost 2 years from now. So, I mean, can you imagine just holding on to that? You're going to be very, very happy holding on to shares for Nikola if it gets to that, and I'm sure it will. Going down a little more. So AMC, we have a $3 put strike price. It's currently at $5. AMC was a when you guys were around, a couple of years ago, when GameStop was manipulated. Anytime there's something catastrophic that happens like that, there's always these wannabe stocks or cryptocurrency. Just like when Dogecoin did its thing, all of a sudden we had thousands of other cryptocurrencies that wanted to be just like Dogecoin. However, only one of them were able to slip through the cracks and to be very, very similar to Dogecoin, which was the Shiba. Well, same thing happened with GameStop. We had a lot of other stocks that wanted to be just like GameStop, but only one of them slipped through the cracks, and that was AMC. However, it's been a long time since that happened, and it's slowly losing its ether, and it's coming back to where it originally was. AMC was always a penny stock. It was always around that $3 share, and it's slowly getting back down there. No matter how you want to slice and dice it, but it's those days are done, and so until further notice, but you still have a lot of people, bag holders, that are holding on to AMC that want to try to see it get up there, but it is what it is. But it's one of those things where a rule that I've always implemented is to avoid manipulated stocks. Avoid that stuff. Don't even see it. Don't even think about it. So AMC is definitely one of those that I like to avoid. But going down the list, we'll kind of take a look and see if there's anything. There's more AMCs. There's a $4 put. There's another $4 call, but later on for the summer. Then we have Bank of America. Bank of America, we have a $30 call strike price that expires this Friday. Then we have some more Apple straddles, and then we have an Amazon call, $103, where Amazon right now is at around $102.51. But another strategy that we can utilize with this page is, let's see this page with the highest open interest rather than the highest volume. So if I click on open interest, it'll sort out the current page by the open interest. But if we refresh the browser now it'll refresh the entire system. So now we're going to see different things. We're not going to see very many things that are expired, but everything is now sorted out by the highest open interest, which again is the total number of open contracts that have been traded but not yet liquidated via offsetting trades, meaning these are what people are bought and are holding. So again, we always follow the money. What are people buying? What are people holding? And right now, the number one is this $2 call strike price for Nikola. Second and third are these AMC puts. We have a $3, $2 put strike price. Then fourth place is the American Airlines, which, we've talked about this in our previous stock market meetings. Ever since American Airlines was just under $20 a share, we've watched it meeting after meeting trickle down and trickle down. I don't know what's going on with there. I mean, I just went on vacation the last few weeks. I even flew American Airlines down to Cancun, Mexico, and it was packed. And I'm just thinking, what in the world? Why is American Airlines? Why are people betting against it? I mean, it's just they're so busy and just so packed. I don't. The only thing I can think of is maybe investors are forecasting, a lot of pilots retiring. I mean, if there's not enough, flight attendants, not enough pilots. I mean, I can see where this could potentially hurt American Airlines. But American Airlines is just depreciating, like crazy. But there's going to be a certain point where, like before Christmas, where transportation stocks are stocks that we're going to want to get into right after summer. So right around fall is when we're going to want to sell our technology stocks, and it's time to get into energy stocks and transportation stocks and other basic materials like gold, silver, things like that, because we want to sell high and then we want to buy low into something else, and that's our plan for later on in this year. So we got more AMC, more Bank of America. We have a $35 call strike price for Bank of America that expires next January 2024. So, but even if you bought bought shares on it, it goes from $29 to $35. You just gained what, like 15%, 20%, something like that. And not only are you maybe holding on to a stock that's appreciating, but they're also, and if it's a dividend stock, they're also going to pay you every 3 months a dividend that you can use for whatever. You can use it for cash, or you can use it to reinvest into more shares. So not only are you holding on to something that's appreciating, they're going to pay you just for holding on to their stock. And I believe Bank of America is one of them. Then we got a lot more AMCs that we want to avoid. Another Bank of America, a $32 call strike price, but this one expires in the middle of May, approximately 34 days from now. Then we have Activision, ATVI, which is currently at $85 a share, but we have a $95 call strike price. So maybe Activision has gotten hit, pretty hard lately. I think didn't somebody just buy them recently, Microsoft? And so, we may not have heard anything of what's going on, but maybe we anticipate that there will be soon. Maybe maybe they're going to release a new Call of Duty game or something or other that's going to be very anticipated, and maybe it's going to do very well. Or maybe we're, but who knows? But something is there's a reason why there's accumulation of a very high amount of open interest for Activision. Now, there's not a lot of volume on this particular one. For that particular call strike price, we have 1,400 for Friday. But it could be selling activity, could be buying activity. We'll have to see how that affects the open interest going into Monday. Will it be more than the 97,000, or will it be less than the 97,000 open interest? But I think it's probably an accumulation. So I think it's going to go up, because I think people are probably buying and holding on to it because this is a higher value than the current share price. And it only makes sense, especially during, before the summer season, and as well as the Christmas holiday season. Because another thing to think about is, it's still the school season. Kids are in school, they're not playing as many video games. But once it's the summer season, kids are home, and now with the younger generation, kids just like to play video games and stay home. Like a lot of us that grew up without, video games, or very small amount of video games, or no computers or cell phones way back in the 80s, 70s, 80s, or 90s, that was, a different story. But but now video games are very, very valuable because there's more people just like to stay home and play games. So video game demand is very, very high, as well as Activision being a very, very reputable company. And I believe, I have to double check this, but I believe that I think Microsoft bought them. Microsoft has been doing a lot, buying a lot of video game companies. That way they can implement more within their monthly video game subscription, but also to try to compete with PlayStation. That way they can try to potentially avoid certain games that used to be available on all platforms. Now Microsoft is trying to monopolize on this and have it available only on the Xbox and the PC with Windows. And so but again, Activision is a good one to kind of look into. There's some other ones. Apple, we have a couple Apple puts, short term, and one for June. We didn't really see any apples up there, but again, this could be selling activity. But Apple is pretty high right now. But we could anticipate more. Now, talking about Apple, Apple is so I always like to share this story when it comes to Apple. Apple, their bread and butter has always been the iPhone. And so but Apple has always tried to manipulate some of their iPhone users to buy iPhones much sooner rather than later. But iPhones or smartphones in general, as well as vehicles, are becoming more expensive, and people are holding on to them longer rather than a year or two. And so Apple didn't like that. So many years ago, they would slow down your phone after a year, and they claimed that, oh, when the battery degraded to a certain point, it would slow down the processor, so that way it would try to extend your battery life. Well, people didn't like that. They sued Apple, and after Apple just built this mega headquarters in Southern California, now they have a huge overhead, and so that they lost this lawsuit. And so now it allows people to, because then it was discouraging people, iPhone users, because when their phone got slow, they're like, oh, okay, I just need to upgrade my phone and buy another one. And so that gave Apple more revenue, but it was manipulating people, and it was wrong. So they lost the lawsuit. They got in trouble. They had to pay a big fine. They came off a software update to update their phones, so that way it wouldn't do that anymore. So people are holding on to their phones a lot longer. Mine is 3 years old. Not sure about yours, but I'll hold on to mine for another year. So I had my iPhone for 4 years. but but one day, Elon Musk with Tesla has always, they were never a profitable company up until a couple of years ago. Elon Musk decided to have a meeting. He had lunch with Tim Cook, who is the CEO of Apple, and said, hey, Tim, people love Tesla, people love Apple. Let's work together that could benefit both our customers and our companies at the same time. Well, Apple pulled out his phone and he said, Elon, you see this? We specialize in phones, not vehicles. We'll stick to what we know, and that was it. So Elon gave Apple a chance to become part of this electric vehicle segment, and they denied it. But after they got this big lawsuit, then Tim Cook was wishing that he would have done that differently. So, but then he announced either in 2019, 2020, that they're going to get in the car business. Now, normally when a company releases something like this, they usually reveal something after 2 years. But because of 2020 had the pandemic, a lot of things got delayed. So normally we would have seen a reveal like in 2022, but that never happened. So I anticipate that they should reveal their electric vehicle this year. And if you've ever seen an Apple event, I believe it's going to take place very similar to how Apple revealed the iPhone X, which was their iPhone 10. So many years ago, when they were there, at first they were revealing the iPhone 8, iPhone 8 this, iPhone 8 that, size, small, large, iPhone 8 colors, blah blah blah. And then it looked like that they were done with the show. But all of a sudden, Tim Cook goes, "But wait, we have a surprise for you." And all of a sudden, the iPhone X came out. And it was a whole new redesigned, structured iPhone compared to the other one. And even though we're like, what happened to iPhone 9? They skipped from 8 to X. But the main thing was, it was a surprise. It was something that we weren't expecting. It wasn't anything that we were anticipating. This isn't something that they normally do. So I believe that this is the year Apple's going to do this. They're going to go over the iPhones, the watch, the iPads, and then they're going to act like that the show is almost, that it's over. But they're most likely, Tim Cook is going to come out and say, "But wait, hold on, you guys. We have a surprise for you." And hopefully we'll see this beautiful, whether it's an Apple car or an Apple crossover. Most likely it's probably going to be a crossover, not a car like this, but it's going to be huge, especially if it's something that's not anticipated to happen. The stock is going to surge like crazy. Normally, we know what's going to happen before it happens. They'll go over the iPhones and this and that. And normally the stock plunges because the price is usually set in knowing what's going to happen. They're going to talk about their phones and this and that, the iWatch, the iPad, and whatnot. And so we know what they're going to do, and they're going to upgrade the cameras. They're going to upgrade this and this. That's it. Last time, the cool thing with the iPhone last summer was the whole SOS, distress call thing. That was phenomenal. You can be in the middle of the boonies, no cell phone reception, no internet, and you can send a distress call to search and rescue and first responders, as well as your emergency contact, just by pointing your phone in the sky, pointing at a satellite that it helps guide you to. So, but it's still not enough to where people are going to want to upgrade their iPhones and to provide a massive amount of revenue growth for Apple. But this car, though, because for example, the iPhone probably provides Apple's about 70% of their revenue. But if they come out with a vehicle, an all-electric vehicle, that's going to be a game changer for Apple. But we could potentially see, but maybe Apple's share price is kind of reflecting that, because Apple wasn't, what, $120, $130 when the market reached its market bottom several months ago. Now it's up, 20, 30%. We're in the $165 range. So I'm thinking that investors are starting to feel the same thing that I'm thinking. I don't know about you guys, but if you're on the same page, whether you've been through this, you watched this whole thing played out, or if you're just new to the stock market, this is very, very historical stuff that we've been talking about, as well as what's going to happen next. So I really, really strongly believe that this is the year Apple is going to reveal their Apple car. Now, if you've ever seen how Elon Musk reveals the Tesla, it's always unscripted. He says whatever he wants. Versus any other company, it's always going to be scripted and whatnot. But the cool thing that like Ford Motor Company has done to copy Elon Musk and Tesla is that at the end of the show or the reveal, they always say, now you can go to tesla.com or ford.com and reserve your vehicle. And what that does is that it helps manipulate their numbers, because nobody's going to see this car for at least 2 years. So if they can take all these online reservations, whether it's $100 or $500 reservation, that's going to provide a massive amount of revenue for the company. And so the expected earnings beat is a no-brainer. They're going to beat. The stock is going to surge to $200. Maybe even $300. Who knows? Within a certain amount of time, Apple is going to do very, very great. And they're a dividend paying stock. So not only are you holding on to something that's appreciating, but they're going to pay you a dividend every 3 months. So that's there's more insight on Apple. So that way, you know what's going to happen before it happens, because this is inevitable, whether it happens this year or the next year, it's going to happen. It's not a matter of if, it's a matter of when it's going to happen. So more Bank of America. We even have a $40 call strike price for Bank of America. We did talk about a $35 call strike price, but we have a $40 call strike price for Bank of America that expires next January 19th, approximately 279 days from now. So going from $30 to $40, that is a 33% gain just by holding on to an appreciating asset, as well as them paying you a dividend every 3 months. So great information. Now we have C. That's what was C? Citigroup. So another bank. So Citigroup looks like that, which is $49.50 a share, but we have a $55 call strike price that expires next January 19th, approximately 279 days from now. So, but you can see that financials are even though they're getting hammered, but we're seeing that people are buying into them and betting that they're going to go up. But you can see, as part of our economic and stock market cycle, those are one of the things that it's time to buy. It's time to buy technology stocks. It's time to buy finance stocks and cyclical stocks. And so this is the time that they are going to be at their lowest price until the next part of the cycle, which will be more towards the fourth quarter, or before the bear season begins. So hopefully this has been very valuable to you guys. Anybody have any questions? Anything you guys wanted to go over? Hopefully everything makes sense. No questions. That's always good. If you do have any questions, feel free you can message me, and or we can always chat in the chat room. You guys, thank you very much. I'll get this uploaded shortly for your reference. We'll see you next time. Let's have a great week. Make good choices. Stay safe, and let's make a lot of money.